Hello, everybody. I'm Peter Grant with Zaner Metals in Denver. Welcome to This Week in Metals. My colleague Peter Thomas is with me, of course. How are you
Okay.
today, sir?
I'm good. I'm good. We have a beautiful day. Everything. We had a terrific week in the market as far as volatility goes. We love our vol, and a lot of things went where we said they were going to go. So it was an exciting week.
Yeah. So last week, gold only ended up marginally higher,
Yeah.
but zeroed in on that $1,800 level. Got as high
Right.
as about 1790 or so. Futures cracked the 1800 level.
Yes, they did. Yes, they did.
And so there was much talk about that. And I think it's just a matter of time before it drags the spot through that level. The resistance level that we've been watching for some time now is sort of 1795 to 1802. It's
Exactly right.
a series of highs from 2012, I think.
That
Um,
sounds
and
about
then
right.
and then beyond that, there is not a heck of a lot until the all-time high.
Well, I
So
think if we blow through that, and then if we take out '07, we could go to 21, and then 1885 is the next resistance I see. So it could get real interesting over the next month.
market looks good. Everybody's talking bullish. Sometimes that
Yeah,
makes me a little bit nervous
that's because you're smart.
when everybody's on the same
Yeah,
side of the
everybody's on
trade.
the same page. Run like hell.
So let's just throw it out there that, again, we're kind of overextended a little bit, but could see some corrective activity. But
Oh,
I think the market is going to continue to view it as a buying opportunity, particularly in light of kind of the reemergence of COVID.
yes.
And, we closed the bars here in Denver again. It's a little
Yeah, they're
frightening.
they're, they're discussing it right now. Our great governor who's up at his estate in Wisconsin is,
Say what now?
yeah, right, is up there carrying the banner, and
I'm
while he's
I'm
talking about
guessing
closing our bars here.
I'm guessing Mr. Prisker has several estates. Wisconsin is probably
That
just the
I
closest.
would say he could probably buy Wisconsin if he wanted to, but we'll leave it at that.
Perfect. Um, so some big news in the gold market out of China this past week, though.
Absolutely.
What do you know about that?
Well, I was going to do a special for Bloomberg on this, and I think that we have now what is shaping up to be the largest counterfeiting exposed ring led by a general out of Wuhan, China, in the history of the gold market. And it started about 3, maybe 4 years ago, in which it has been purported, let's say, that we are missing somewhere in the area of 2.8 to 2.9 billion dollars worth of gold. And if you think about this right now, if you called me up on our gold desk and asked me for a ton of gold, I would be right around 50 million. So it gets into a collateralized situation here where we have an individual who collateralized to 19 large and mega large firms in China to the tune of 2.3 billion. I'm very hard with numbers from China, so give me a little room here, guys, because you never know what you're going to get. I mean, we have to distill these down. I'm doing the best I can with what I'm reading here in bits and places. But I'm looking at 19 financial institutions which had pledges going back to 2016 for leased and or collateralized gold, which was found to be plated copper and according to some reports, or titanium. And this could prove to be a major engine to drive this gold higher. People don't understand how much gold that went missing, and we're looking at China
Well,
right now. Well,
missing,
well,
missing. I mean, did it ever really exist? That I
well, we
mean,
don't. Well, I mean, let's put it this way: here's a pile of gold, and then we look at it, and it's tungsten, it's copper. The gold is missing. It was plated, but the gold isn't there. All right.
yeah.
So the real asset isn't there. So If
Right.
China accounts for 22% of the total consumption of gold, and according to my numbers, we're looking between 4.5 to 5% of the net balance of all the gold produced by China in a year. So multiply, your 1800, let's say, by five. So you could have 1850. If they came into the market, we would go to 1850 without too much of a problem. And even if they managed to put the brakes on and buy it quietly in 400-ounce bars to offset obligation, because this general cannot go force majeure because it's pledged inside of China to major firms as a collateralized asset, not to be delivered, but to be secured against. So
Right.
you can't walk away from this. You have to
Yeah.
make good. So if you have to make good, and I mean, I've got the People's Republic of China's bank is saying 3.3 billion. I'm seeing 2.8 billion, but somebody's got to reach in their pocket for the B word, and they got to buy that gold in order to make good on the obligations of that. So where's the gold going to come from? Are they going to go to Switzerland? Where are they going to go? And does Switzerland have uh, that, like maybe 50 tons of gold laying around? I don't think so. I think what's going to have to happen is they're going to have to bleed it in, 10 tons at a time over the period of the first half, or maybe even the end, going into the end of this year, in order to balance out that obligation, plus all of the swappage and standby. They do 10 to 13 tons a month usually is what they bring in, which they're going to have to bid for also. So now all of a sudden, last time I looked, that's another 80 tons they're going to have to bring in. We got a real big problem here, and the question is, how real is it, and how much are they going to push, and is the general going to be held accountable, or is he just going to have a car accident? I mean, we don't know. So there's a lot of things going on behind the scenes, and Zaner's breaking a lot of this to you right now. Nobody's talking about this. If these obligations are forced to be met, we're going to see the underlying, the physical gold being in such strong demand out of the quiet halls of many, many banks, that pressure will spill over and we will see a rally, not a matter of if.
Yeah. So, the question becomes, do the banks and financial institutions want the collateral, or do they just want to unwind these loans and be done? And I think your suggestion is that um, they either have to recollateralize the loan with the real
Right.
deal. Is that what you're
Well,
suggesting?
here's what I'm saying. The Chinese traders, for some reason, a lot of Western guys don't understand how good they really are at trading. I mean, they've been doing it a lot longer than we have, and
That's
they
true.
get it. And when they started taking these loans, gold was at 12. So now, look at this monstrous rally. We're at 18. So all of the gold that they held against the obligations have increased by as much as 29-30%. So they're sitting back going, this is outstanding. We're holding all this gold. We are holding documents of an obligation for X amount of weight. We want the weight. They're
Right.
not going to ask for the money. They're going to, unless you want to make the money whole for current spot. Where's that going to come from? So this is a
Right.
real conundrum.
Yeah. Yeah, and the whole rule of law thing in the PRC is a little dubious, to say the least, sometimes, particularly when you're dealing with somebody on the inside.
Yeah, that's pretty well
Um,
put. And I concur with you 100%. The question is, it's so much money, and there's so many people losing face over this. The question becomes, can it go away? I mean, can we quietly see this disappear? I don't know, Pete. I really don't. But I think that our viewers that trade gold with us and trade gold in their day-to-day life need to know that this is percolating on the back of of the stove, and it's about to spill over.
Right.
Yeah,
All right. Sounds like it's probably a tailwind.
I think so.
All
But
right.
it's interesting, and I'm glad we got it out there.
Absolutely. Let's move on to silver. Silver had a good week last week.
Didn't it?
Uh, was up 1.75%.
Right.
It was the third higher weekly close. Closed over 18 bucks. Um,
Yes.
and set an 18-week high during the week. Came off a little bit, towards the
Towards
end
the
of the
end,
week,
yeah.
but
So a little
still.
profit taking, which we usually do on a 4-day holiday anyway.
Right, right.
Yeah.
So that market looks pretty decent at this point. 1844 was the previous high, so we still got to crack that
Yeah, we're
uh,
ways from that.
to
Yeah.
uh, to kind of signal a breakout of the range that has dominated for the last number of weeks. Um, somewhere in the back of my head, I still like $20. But
I mean, I'm not going to argue with you. I told, I think, the Wall Street Journal that, a while ago that we would see $20 this year, and so I concur. I mean, let's look at it this way: the high is only 30 cents away. 30 cents is an intraday trade. So can we crack that 40 area? Absolutely. The question is when.
yeah. And it makes sense, given the all of the analysts that are calling for new all-time highs and
Yeah.
2000
Yeah.
$2,000
A
gold.
lot of major
20
banks came out too, which was
Yeah,
interesting.
yeah.
Yeah.
So $20 silver makes sense. That puts the ratio at 100. That's
Right. Right.
pretty
Yeah.
that's
Pretty standard,
pretty
right?
standard now.
Yeah, I mean, we've been running like 130 to 88, so that puts it right smack in the middle almost. So I don't have a hard time with that, Pete.
Yeah. And a lot of the data that we saw last week was really quite encouraging. There were some outliers, but consumer confidence rebounded to 98.1 in
Staggering
June,
number. Staggering.
way above expectations of
Yep.
90, and that's versus 86.6 in May. Manufacturing ISM was better than expected at
Right.
52.6, so back in expansion.
Yep.
Um, Auto sales kind of as expected,
Well, yeah.
um, and the outlier was construction spending, which fell 2.1%.
But you know
But
what? Let's put a caveat on there and talk about the housing number, Pete. You saw that, I know.
um, the you're talking about the Case Shiller
Yeah. Right.
number.
Yeah.
I don't have that number at my fingertips, but
Okay. Well, let's
uh,
put it this way: it was much higher than they were looking for. It was very bullish, and new housing under contracts. People were making obligations to buy. So to say, I think the two kind of offset one another, and I think that will show. There's a link to computers, a smartphone, smart thermostats. All of them use silver. So I think something that can creep into it.
gotcha. Um, the big one, though, once again, for the second month in a row, was non-farm payrolls, way above expectations, plus 4.8 million. Um, Expectations were just a shade over 3 million. And we
Right.
saw a positive revision to May as well at just shy of 2.7 million. So, the labor market is sort of screaming, um, V-shaped recovery. The
Yeah.
unemployment dropped to, I think it was 11.1.
It was a big
Um,
number, big drop.
so holy cow,
Yeah, there's a lot going on here. And then the question, of course, goes to not only does it go to silver, but it goes to copper as we start talking about durable goods. I mean, are we seeing revenues running back into the homes again to where people have been at home for a while using their washers? It's time to get a new washer, a new dryer, a new whatever. But we're seeing demand for copper right now, which is saying yes.
Right. And so let's roll into copper here.
Absolutely.
Up 2.3% last week.
Amazing today. Amazing.
Um,
Yeah.
yeah, looked, set 23-week highs.
Yes. Yeah.
I had mentioned in last week's show the possibility, just because it had kind of a soft close on the previous Friday, that there was a risk of a double top. But that lasted like one trading day. On Monday, it blew right right
Well,
through that
I mean, I
high.
heard the hull of the Titanic dragging along the iceberg, and
Oh, stop! You're killing me.
I'm sorry, but it was too easy.
Oh,
I
I
had to
know.
go for it. But at any rate, our guys, our scrappers, our end users, all were having very good weeks. We were seeing trucks rolling out of 2,700 locations that we keep an eye on, and we were very surprised at how good demand was and how much product was moving. And the question becomes, how much of it is going to get to China? I think a lot of it is. I think we're going to see a lot of demand, and a lot of demand is going to be coming in from for electric cars.
You're not talking
Can't
about
look the other way.
fake gold bar demand, are you, in
No,
China?
that's
No.
a different demand in which you're not allowed to see.
I think they're wise to that trick now.
I let's hope so. I mean, we'll see, right? I mean, who
Yeah,
knows?
yeah.
I
So
mean,
yeah,
we don't. You know what? I'll tell you something else. I think we got to look at a few other vaults in China. You know,
well, yeah, there was
what
some
has been going
speculation
where,
about
right?
that this week, that they may have just found one example
Yeah.
of counterfeit bars, and um, so
Yep.
if I'm a holder of gold collateral, I'm a little nervous right now in
Oh,
China.
big time. And not only that, are you at risk, your personal risk, your family at risk, your business at risk if you ask to have it inspected? You know, what are you going to do? You're going to say, hey, I got $500 million worth of gold I'm collateralized with. Could somebody go run a drill bit through some of these ingots? And they'll be going, excuse me, you want to do
You
what?
don't want to do that.
Yeah, you really don't want to do. Matter of fact, I think we need to have a little talk with you at a re-education camp.
Oh,
So I mean, this could be very interesting, but
yeah, for
you
sure.
know,
Um, Platinum group metals
yeah,
were
PGMs.
kind of mixed, but higher. Platinum was up a little bit more than 0.5%. Just kind of still consolidated, tracking the
I agree with you.
100-day moving average, which is downward sloping. But so kind of trading on either side of that within the recent range. Palladium had a good week, a little bit more than 2% higher last week. But again, still well within the recent range, and not really showing much impetus to break out of that range.
Well, we had two things happen. Let's talk PGMs for a real quick second here. We had demand stuff leaving the scrap yards, stuff leaving the mining areas was about where it should be, a little less than what we usually see. But we also saw mining production of raw ore lower, and we saw stockpiles lower. So we had less product and we had less demand, so they kind of offset one another. So
Mm,
what you're saying is makes a great deal of sense. We're in a consolidation area, and let's see what happens.
yep. So as we look ahead to this week, um, not a heck of a lot on the calendar. I mean, we have
Right.
services ISM. It's supposed to come in at like 49.3, so still contractionary. Um,
Yeah.
I wouldn't be surprised to see it beat that, and be back above the 50 threshold. Wholesale sales expectations are plus 4.5%.
Which is a good number.
Yeah,
It's a good number if you think
yeah.
about it. Yeah.
And then PPI at the end of the week, still pretty soft on inflation. Plus 0.4% is what they're looking for, which will
Think
probably year on year it'll still be in the negative.
Right. I
Um,
don't think we're going to see any real inflation numbers for a little while yet, just
yeah, I
because
think
there's
you're right.
just too much cash being pumped in to even get it. Even get it. The smoke is so thick, you're not going to see anything.
Yeah, yeah, and so talk of another round of
Yep.
stimulus
Yeah. They got the
checks.
syringe out again, so we'll see how much they stick in the arm this
We'll
time,
get that inflation if it
right?
kills us,
It's exactly
and it
right.
just might.
It just might, baby.
Unless
So,
you have gold.
Coronavirus has lifted its ugly head again. We need to quickly mention that. There's a lot of scuttlebutt from some very qualified people I talked to that this second wave is not the primary disease, but is a mutant or an isomer or a left-handed agent, and is a possibility that this is a new wave. Question becomes, how strong is it? What is it? Its morphology isn't any greater than the last round. So we're going to have to see. Next week is going to be very telling. Let's watch the numbers.
Yeah, absolutely. So
Yeah.
with that, I wish you a great trading week. Please give us a like and follow us. And we're on Twitter and all the social media
Facebook,
channels, Facebook,
everywhere we need to
etc.
be. And by the way, you can link up with us on LinkedIn. We put a lot of articles in there also.
Absolutely.
Yep.
With that, I'm Peter Grant with Zaner Metals in Denver.
Pete Thomas in Chicago.
Have a great week.
Have a good one. Enjoy your